Don't miss this. Bitcoin is on the verge of a major move, and we can catch this now before the window closes. Let's jump down into the charts and take a look if we can catch this next wave. Now, here we have an interesting setup for Bitcoin. A lot of people are looking at the chart saying maybe we have a bit of a breakout situation occurring for BTC. We have, of course, closed most recently, just a couple days ago, above the 50 exponential moving average on the daily time frame. That is this blue line that is coming through here, but we are finding this upper area of resistance on the 50 simple moving average, and this is an area of concern for the price action of Bitcoin. So the next major move for Bitcoin here is to either break down or break out, okay? And we don't necessarily know exactly which one of these is going to unfold, but what we do know is how to trade on either of those scenarios. So don't click away just yet. Let me explain in a little bit more detail as to my thoughts and my processes on this one. So as we have this 50 exponential moving average, the blue line coming through here with our closures above it, and it's basically showing us with support, okay? We have the resistance being the 50 simple moving average, okay? And so what we're looking for here is a closed position above the 50 simple moving average. Now, if I go back into history here, you can see how we were dancing around the 50 exponential moving average as we were finding support on the 50 exponential moving average, and we were dancing around the idea of a breakout for the 50 simple moving average. Okay, this happened over here back in January of 2024. Okay, we had that initial surge close above the 50 exponential. Okay, we moved up, we did close just above the 50 simple moving average with support being found on the 50 EMA. Okay, we actually had a few positions here closing above and below, dancing with the idea of a breakout situation. Okay, now I talk about this because this is where we find ourselves right now. It's a slightly different setup, but we do still find ourselves with a breakout above the 50 EMA. Okay, we broke out here on the 20th of April. We tested, we found support on the 21st. We rallied on the 22nd, and we're finding the resistance on the 50 simple moving average right now. And so if we are to be looking at this through a bullish lens with that idea of a breakout, then we want to be looking for closure above the 50 simple moving average. And that is going to be where we go long on the market, putting our stop loss lower than the 50 EMA on the daily time frame, and we target out new all-time highs on the next run to the upside. Now, I've said this before and I'll say it again. We do look for a risk-reward ratio of 1.5 or higher. Anything lower than 1.5 is going to be really poor risk management. Essentially, what the risk-reward ratio tells us is for every $1 of risk, we will be looking for $1.50 in return. What we don't want to do is have, a 1-to-1, for example, where you're earning $1 for every $1 of risk. It wouldn't make a lot of financial sense, and it isn't a good idea to be growing your account, in my personal opinion. Let's take a look at the charts once again. So if we can come up with a risk-reward ratio of something higher than 1.5, then we're in a pretty reasonable territory. The greater the number, the better the risk-reward ratios. But also, you have to bear in mind that sometimes there are greater risks if you have a really high R&R. You want to make sure that it's all well balanced. So here is the idea for that long position. But as I said earlier, it could also break down. With this area here being resistance at the moment, should we get a closed position lower than the 50 EMA, then we want to potentially go short with our stop loss above the 50 simple moving average, and we'll target out this lower range at around $55,000. And again, the risk reward ratio to this would be high. It would be about 2.21, so you know that there's good risk management associated with it. Good stop loss above the previous area of resistance, and so this could be another fantastic way to kind of trade on the Bitcoin price at the moment. Now, I know it's not necessarily what you want to hear. You always want to hear that prices are going to go up. They're always going to be rallying up higher and higher. However, in the charts, there are a few reasons and a few logical reasons why you might not want to go long on BTC until you get those confirmations. Let's take a look at some of those. So here we have our stochastic RSI. Now, you note that the stochastic RSI has some upward momentum to it at the moment. And we do have this idea that we had a breakout from our previous downward trend lines when it came to our stochastic RSIs. However, it is moving heavily towards the overbought area, and typically when the price action is in the overbought range from the stochastic RSI, we see reversal in the market. So not only are we of course heading up towards overbought, but we are dancing with the idea of hitting resistance on the 50 simple moving average on the daily time frame. So what are those numbers? Well, the 50 SMA is coming in at $67,557, with the 50 EMA coming in at $64,800. Okay, so we know that there's a couple of things here. Closed above 67,557 is going to be your long indication, and any closed positions lower than $64,800 is going to be your short confirmation. Okay, so it's important that we understand that where we are at the moment isn't necessarily the moment to be taking action, but it's to be monitoring and seeing where those daily closes are, because they're going to be giving you the indication as to what is most likely to happen next for BTC. Okay, let's go ahead and take a look if there's any divergences going on. So a divergence indicator essentially looks at whether or not there is price deviation in regards to the relative strength index. Now, the relative strength index, the RSI, is indicated here with our yellow line. And then we've got these little flags saying that we are bearish or bullish, depending on whether or not the price action is deviating away from momentum, indicated by that relative strength index. At the moment, we haven't got anything showing up here from a deviation. So actually, divergence indicator is showing us that there's still some upward momentum on the relative strength index, and we shouldn't be terribly too concerned overall. But if I were to draw a trend line in here, I would be looking at this as one of two things. We've either kind of got ourselves a breakout situation that's kind of happened already, or we are still in this downward movement here for the relative strength index, and all we're likely to do is test this trend line out and then get rejected. So a lot of eyeballs will be on the relative strength index as well as the price action with the EMAs, the SMAs, and all those kind of good things. Okay, so from our price action, it's looking pretty interesting. I've been through this before. We did already hit our minimum expectations here on a 3-wave corrective pattern, and this was our area that we had marked out at 57,200 to 59,955. Now, this is an indication that this was a good move to the upside. The concern that we have here is that we find resistance up at 68, 69K with a wick, and then we get rejected, leading us down towards our 200 exponential moving average at 52,900 to 55,800. This would, of course, be the ultimate target range. If we were to see a move down in this particular order where we have a giant kind of 3-wave movement like this, this is going to be the buying opportunity of a lifetime down here at that $52,000 to $55,000, because that is going to be a major area of support on that 200 exponential moving average. It is going to be a fantastic opportunity to dollar cost average into Bitcoin, but not just Bitcoin. There's going to be many altcoins that will also bleed out, and the entire crypto market would bleed out at the same time as that. So if that scenario does play out, it's going to be a huge opportunity to soak up a lot of that supply that floods the market. Okay, some fantastic things to kind of be considering, and some fantastic things to kind of keep an eye on in the coming days, weeks, and months. Everyone is buzzing about Blowfin, a new cryptocurrency exchange taking the market by storm. Join a thriving community of traders and unlock a world of powerful tools, educational resources, and exclusive benefits. What are you waiting for? Check it out. Link is in the description down below. Numbers don't lie, and well, Bitcoin is outperforming Tesla stock. So what's going on? Well, in a most recent article kind of posted out on Cointelegraph, Bitcoin has been outperforming Tesla stock for the first time since 2019. Bitcoin's price is outperforming Tesla stock for the first time since 2019, though the EV giant still maintains a sizable BTC stash. So again, it's just taking a look at a comparison. We have seen Tesla stock moving down, and we have seen Bitcoin rallying up. So it's no surprise that BTC has overtaken Tesla in its long-term gains. We're not talking about the short-term moves, we are talking about the long-term moves. So over the past 5 years, Bitcoin's price has risen 1,180%, while Tesla's stock has only risen, and I say only risen, 806%. So it's really interesting to see, the comparisons, and obviously anyone can cut data any way in which way they want to kind of try to make these comparisons, favorable to their arguments. This particular article is all about pushing the narrative of Bitcoin. So it's important that we understand that, yes, although comparing these two over the time frame of which has been compared, yeah, sure, Bitcoin has outperformed over that 5-year span. But I do want to kind of point out that actually there wasn't that many different gains made between the two. It's around 300%. And when we talk about cryptocurrency, 300% really isn't a significant move. So, 3x or so. It's not to be sniffed at, but it's something to also consider, when we talk about things that have moved 17,000 or 20,000, or the case in Matic in the previous bullish market where we saw 42,000% in gains, or, we see meme coins that are absolutely popping left, right, and center. So although this is a really interesting point of view where we do see, Tesla stock, underperforming against Bitcoin by the sum of around 300 or so percent, it is still to kind of take note of actually all of these were very profitable trades, whether you were in Tesla or in Bitcoin, or whether you were making far more gains by actually taking part in the altcoin market. You let me know your thoughts on all of this in the comments below, but I do find it interesting. Numbers don't lie, but obviously anyone can compare anything over any particular time using TradingView, and you can draw lots of different conclusions and results. I don't think this is a negative impact on Tesla. I don't think this is necessarily a huge positive to Bitcoin either. I'm somewhere neutral in the middle of this. It's hard to say that Bitcoin hasn't outperformed many assets most recently, simply because of stock market money flowing in via the ETFs. So, if you were to rip that out of the equation, actually, I would say that Bitcoin's definitely underperforming against not only altcoins, but also some of these stocks as well. And this is because we do see diminishing gains over time, as I was talking about previously, and we are all waiting with eager eyes to see Bitcoin do something phenomenal and have a fantastic breakout of the current trends that it finds itself in from 2010 through to current. It'll be interesting to see what happens over the next 3 to 5 years for Bitcoin, and that I think will be very, very interesting. From good to bad, a $9 billion bomb is about to explode. Mt. Gox's payout could spook the market and send Bitcoin's price plummeting. So what's going on? Well, the potential return of more than $9 billion worth of Mt. Gox era Bitcoin over the next few weeks might spook the market and put negative price pressure on Bitcoin. Earlier this week on Reddit, some creditors of the failed Mt. Gox crypto exchange reported seeing updates on their claims, with many interpreting it to mean the crypto payment could be coming soon. The update included how much cryptocurrency and fiat were owed to creditors, as well as completed repayment dates. The update could mean creditors might start seeing Bitcoin returned as soon as next month, assuming it follows a similar repayment schedule for fiat in March. And this is a pretty big deal, right? $9 billion is enough to definitely get the market spooked. It's definitely enough to be kind of concerned over Bitcoin. Okay, we've been through the charts. We've been through what's going on with BTC in terms of positive news, right? $1 million or zero. We see Bitcoin outperforming Tesla. But unfortunately, there is this big looming dark cloud over Bitcoin right now that could potentially see a significant amount of selling pressure enter the market. Now, if we were to see that, is there going to be enough demand to soak up $9 billion? And that is, of course, the $1 million question. Because if the ETFs are able to soak up a significant amount, damage is going to be limited, in my opinion. You've got to bear in mind, just because people are getting their Bitcoin back after it being kind of, stolen, I guess, from Mt. Gox for so many years, doesn't necessarily mean that they're likely to sell. Some of those creditors may only sell a portion. Some of them may hold for a longer term. Ultimately, it's going to be interesting to see how these investors, how these creditors do actually impact the price action of BTC. For me, I think we're going to actually be reasonably okay. I don't think this is going to spook the market terribly too much. We might see a little bit of negative price pressure from institutional investors who are a bit nervous about this, so the ETFs might have an increase in the outflows on a shorter to medium term. But I do think in the longer term, we'll bottom out, we'll find good support. It could be a fantastic opportunity to soak up some of the supply as it enters the market, build out those positions, because as I've said before, and I'll say it again, I'm expecting a fantastic run, not only for Bitcoin, but for altcoins in the coming months as we look to close off 2024 and go into 2025. You can let me know your thoughts on this whole situation in the comments below. Do you think that Mt. Gox's Bitcoin is going to create a significant downward price pressure on Bitcoin, or do you think a lot of that is going to be soaked up by the demand coming in from the ETFs and from retail investors? I'm really interested to canvass everyone's thoughts and opinions on this one. But not all institutional level investors are worried. Fidelity's Bitcoin ETF just got a huge vote of confidence with an institutional investor investing $40 million. And, this is just to show you that there is still some strength in everything that is going on at the moment. Although there are some reasons to maybe be a little bit cautious with the market, specifically with Bitcoin and the altcoins, there is still a lot of confidence out there in this bullish market that we do find ourselves in. With Fidelity's Bitcoin ETF drawing in an additional $40 million from a single large investor, this is going to be showing some strength in not only the ETF plays that are going on, but in Bitcoin and in the crypto market. So although Mt. Gox's Bitcoin might be a little bit daunting, as it does show a significant amount, $9 billion worth, coming potentially onto the market, which I don't think you would see, but it's a number that gets thrown around out there. There is still institutional investors out there actually looking at this, looking at all the data and saying, I think this is actually still a very good play. And they're going in with a sum of $40 million. So I think for the most part, I'm not terribly too concerned over what is going on in the wider market here. I do think for the long term, and not necessarily the short term. So we might still see some volatility. We have spoken about those moves to the downside on the smaller timeframes, but for the larger timeframes, I am still incredibly bullish. But guys, if that's not enough to whet your appetites, why don't you check out this video just over here where we're discussing what's going on with Solana.